Welcome to TradeTheMBI.com. This is John. This report is for the 10th. Well, again, we're still playing underneath that ABM yellow. Dipped all the way down to the ABM green. That caught the support, and that was enough to push things right back up. Again, like we were talking about before, is that option decay and very effective in the move. You wipe out the calls and then you take care of the puts by creating a rally. So it's just a matter of knowing which time to pop into it. Now, of course, we can see the MBI magenta has been above um, yellow here, so that's a positive. And at the minus 20, we're seeing a peak of the uh, midterm buyers here in green DOC starting to pop up. Of course, short-term buyers, a little bit of a fade. So we've already seen that the short level was relatively high with the cyan at these levels. So I'm not expecting a whole lot of anything. And, again, this is going to be a little bit more driven by some of the data. And, everything that's been coming through indicates the same things, that there are a lot of headwinds and that things are slowing to the degree it's a little bit back and forth, and I think that's part of the hit and miss. Certain regions are going to suffer, others coming back a little bit, and that just becomes this play back and forth, which is causing a little bit of malaise. But the ranges are still quite nice. You can see from an NQ standpoint, similar reading, almost identical, except for not seeing the turnaround yet here from the DOC midterm buyers here in green, and we've also dipped below the red line. So it's a cautionary tale, particularly if any selling does begin to accelerate. You will not hold the supports, particularly in this case, the 61% or even the 50 if it should start to move that direction. From a treasury standpoint, again, they really don't know which direction to go at this point. They still believe that the Fed is going to soften things, but how can they? They think that now the new narrative is that the inflation print that came through was just a one-off, that it's not going to stay that way, that there's no new inflation, even though we've seen this increase in oil costs, and that is certainly going to get spread through to all areas as gasoline production causes increases, and that spreads through. And then you throw in some of the other things like California and their minimum wage jumped to $20 an hour and stuff, and it's just interesting when you see the number of companies that are laying off, and you look at it state by state, and there's just been a lot of job layoffs and unemployment, and yet it doesn't reflect anywhere in the national figures. It's quite interesting when you break out those statistics. How do you reconcile those two? And it's called creative math. We're in the new age of math where 2 plus 2 is 5. And in this case, you can lose hundreds of thousands of jobs in each state and still nationally have no change. The euro also no change at this particular stage. Remarkably, given the fact that what's the eurozone got to offer, and they're having to pay more for oil and gas and everything, and this is all reflected in gold again. We can see it. You're not stopping it. Crypto ended up having a little bit of an inside back and forth day on that. It's going to be an interesting one. There's going to be a lot of mission mash. Of course, you've got Bitcoin with that having coming up, and that will be an interesting one to see what that does to price when you're going to reduce the amount of profits miners get, and that will have a significant impact on the amount of processing and everything else. So we'll see how that one plays out, because for a lot of them, it will become unprofitable unless they have free energy. ETH likewise doing the same thing, almost reaching short proportions right there with the MBI white. It's been in that malaise zone. So it was a matter of waiting. We talked about the reality of this similar matchup. Didn't quite get it because that second run of the MBI white did not pierce the magenta, but it was enough that when the white got through, blew back down through supports all the way back down to the 23%. So they're pretty close to doing it now. 0% is rising. So, and then that stabilized, and boom, they shot it right back up to the exact same spot. So, but you're making successively lower highs, and that will start to weigh on things. This is what it looked like intraday. You started off with the pre-morning light sell. That accelerated once they cleared out all the call situation. Put buyers started jumping in, and then they were ripped to shreds with the slow, uneven move to the upside, and it just decays them completely. And here we are left in the post market going literally nowhere at this particular stage in the European session, and rather chaotic. And this is just because it's really hard to determine what room the Fed has to do anything. And if it doesn't, then literally you got to go back to the real indicators of what's taking place in the economy. And it's holding on. It's doing all right, not great, not horrible. It's just the more prices begin to erode free spending in that, it just limits growth potential. And then you talk about taking $1 trillion in extra debt, and uh, you really just cripple an economy with this construct as it is. And the only other way out of it is just low energy costs, and there's just no desire for that at this particular stage. So that's the long and the short of it for now. Anything relevant, I'll get it on the Skype chat. Have a good one. Trade well.